The European Central Bank decision is due, and the market will be watching closely to see what comes of the always anticipated event. Heading in, there's been a lot of talk about a more dovish and downbeat leaning tone in light of a recent run of softer economic data and worrying downside risks to the Eurozone and global economy associated with bigger picture themes including US trade and Brexit. But as always is the case, the market cares less about what actually happens and a lot more about how things play out relative to expectation. With that said, it would seem the balance of risks should at least mitigate the prospect for meaningful additional downside pressure on the single currency associated with this event. At the same time, we find it hard to see a scenario in which the ECB would be encouraging the euro higher, but would suggest that if the euro does manage to hold up through this event, which has all the makings for more dovishness, it could actually be quite bullish. We've spent a lot of time talking about a euro outlook that's a lot less about the euro side of the coin and a lot more about what's happening on the dollar side. This is a side that we believe plays a much bigger role over the medium term with respect to influencing direction. And with that said, we believe the combination of a Fed pricing its way back to a full pause with even the possibility for a cut down the road working into the conversation, ongoing stress associated with U.S. political climate, and a very clear soft dollar protectionist policy, it's a combination that will have the euro looking up, like it or not. As a reminder, this will be the first ECB meeting of the year and the first meeting since December when the central bank announced the end to its asset purchase program. Overall, the key takeaway is the dovishness already expected and priced in heading into the decision and where that might leave the balance of risk in the aftermath. Technically speaking, key levels to watch above and below come in at 115 and 113. 113 guards against the 2018 low at 112.15, while 115 is that psychological barrier that, if broken, will likely accelerate gains back above a recent recovery high at 115.70. That's all for now.